Alright folks, welcome back to another video. Today we'll be discussing this trade which was given a few weeks back. Because as we know, history is a gold mine and it repeats itself for those who have eyes to see. Which is why backtesting is crucial during the developmental stage of becoming a trader. So, the idea was, we have here Euro USD. It closed in this shape. Now, what's happened here? First of all, range high, right? Range high. And range low. Right? And of course, the famous / infamous mid-range. Now, what's happened here is that Euro had bumped. It was rising and rising. And it bumped into an old breaker, which had proven as resistance before, right? Right here. And it simply went and purged this high, which was inside of the breaker, right? So highs inside of liquidity pools, highs inside of P arrays are high probability turtle soup setups, right? Once again, highs and lows. Highs and lows inside PD arrays are high probability, horrible spelling, high probability turtle soup potential setups, right? Because as we know, nothing is set in stone. It is a game of probabilities, right? Get this. That is for the notes. So you have this happen, then you have a rejection of the high, right? It closes once above, never twice, and it falls down. Now, keeping that in mind, we close with the high, we close back below the high, right? And we're entering a seasonally bullish time for the dollar, right? So we close out the high, we close back below the high, disrespecting the 50% of this FVG, bullish, right here, and at the same time creating a bearish FVG, right? So the idea was that you go from this old high, we take the liquidity from this high and that high, right? Remember? From these two highs, an old high, an old liquidity pool, and we simply continue the trend reversal which has happened. And I had warned of the reversal right at the top, right? Which will also be reviewed in the future, inshallah. So we take the liquidity from the old high and this high down to the low that broke the high, right? Which is this, the low that broke the high. This is a magnet, right? This is the breaker, right? The ICT quote unquote breaker, which is simply another, once again, a price action, a classical price action concept, stolen, copy pasted, and renamed by good old ICT, right? to be fair, it is refined, so he did refine it, so good on him, but it's nothing new. It's not a new invention, right? Anyway, we're disrespecting a bullish PDRA. And pause, before anyone comes and tells me that I'm an ICT hater, I'm not. He's my mentor. I have learned a lot, 90% almost, if I was to guess. 90% of what I know is from ICT. All right? So I'm not a hater. I'm simply a fact teller and a truth speaker. I don't know if those words are even words, but the fact and the point is that, and again, I'm catching myself in a rant about ICT, but the truth is that he has copied many of his ideas and concepts from other creators, other authors, other less known authors of concepts, including classical price action, right? Which is the low that breaks the high, or the high that breaks the low, right? Those are important landmarks in price, right? Anyway, back to the review. We are disrespecting this bullish PDRA, and at the same time, we have created a bearish FVG. We're showing signs of rejecting highs. We've rejected this high, right? So it is reasonable to consider that Euro is going to go ahead and stab into the previous week's high, the FVG. As we know, FVGs are simply, what makes an FVG special? Why does it matter? Is it just some empty, some hole, some magical? Nope. It is a high of the previous candle for a bearish FVG, and it is the low of the previous candle for a bullish FVG, right? And I've discussed, of course, the anatomy of an FVG in depth on my Twitter, so make sure you go and check it out if you are interested. Anyway, the idea was to stab into the previous week's high and then decline into the low that broke the high as target 1, right? And then as target 2, the rejection block, target 3, this low, and of course, target 4, this low, right? And of course, what happened was, here you go, you're disrespecting the bullish PDRA and respecting the bearish PDRA. So as for now, the order flow is bearish, right? And it's on the way, with this being the next draw on liquidity, given that they respect this inverted PDRA, right? So if they respect, as expected, this inverse FVG, then go and smack into it and fall back down into this liquidity pool, right? So this is the draw on liquidity for now. This low. All right. Now, how would you align yourself with all this? And let's zoom in on this specific part. How would you align yourself for such a movement? Which is keeping in mind the higher time frame right? The context, which is, and the bigger picture, right? Not just the higher time frame. If you go to the monthly, you have formed a nice rejection candle, and a rejection can be defined in many ways. It can be defined by either wicking above a previous candle, right? Wicking from an FVG, like here. A doji candle, right? Which is this candle over here, which also produces a rejection leading to a classic sell or buy candle on the next one, right? Also discussed on my Twitter. If you don't get what I'm saying, then go back and revise, all right? But how do you milk or make or take advantage, potentially, because I'm not a financial advisor and this is not trading advice. This is simply how to read price. Now, how can you read price at an even deeper level? You go here. So right now, we go back in time. We rewind time. We travel back in history. Bar replay. Good old hindsight bar replay, right? You got this, you got a close. Now, keeping this state of the candles in mind, we now go back into the lower time frames, all right? So FVG, remember the gray box, the low of the gray box is the high of the is the low of the FVG, right? Which is a previous week's high. You got the daily, and you got the 4 hour. How do you sync the weekly with the 4 hour, right? Well, if you look at the daily, right, the FVG on the weekly is aligned with an order block, the opening price of the order block. Is aligned right with those equal highs on the 4 hour, right? That was the phone, fell down, never mind. So, again, this is an FVG, so a weekly PD array, and it's a daily PD array. So what do you see? The higher time frame trend is down, correct? Yep. We're looking for lower prices, correct? Yep. We are rejecting highs and breaking lows. Is that correct? Rejecting highs. Highs rejected. Right. Lows broken. Lows broken. No respect for lows. Breaking lows. Rejecting highs. Which means any pop above an old high in a downtrending market is going to be sold off, right? So within this consolidation, this range, right? So we have a range. We have a breakout to the downside of the range over here, right? And right above the range, and this is a good video on range selection, right? This is a range we have here, right? And above the range, there is a higher time frame PD array, which is the weekly FVG and the daily order block, right? So we can reasonably consider that we go from the range high. It's not some random range. It's a previous week's high, right? It is a daily order block. It is a weekly FVG, while disrespecting weekly bullish arrays and respecting weekly bearish arrays, right? It's that simple. highs, lows, which ones are being broken and which ones are being rejected. Bearish, downtrending market, right? Rejecting highs, breaking lows, rejecting highs, breaking lows, rejecting highs, breaking lows, right? So we can expect, first of all, we expect a counter trend rally to these equal highs, right? Why? Because we're ranging range low to range high. And then from the range high, we expect a sell-off right down to here, right? Which is the low that broke the high, which also aligns as equal lows, right? So you see the context. You don't just choose equal lows for the sake of being equal lows. You're choosing the equal lows because they are equal lows in a downtrending market while disrespecting a bullish weekly PD array and respecting bearish PD arrays, while breaking highs, breaking lows and rejecting highs. So you're probing, you're measuring the order flow, and from there you are getting a conclusion about where price is likely to go, right? So I came and warned of a reversal over here, right here, as usual. And then the next warning was given right over here for a counter trend rally up to here. And this has all been given on, it's not me just blabbing and ranting from some hindsight chart. This has all been given to you live on Twitter, all right? You got this. Warned here. Warned over here of a counter trend, of a counter trend rally. And given this exact trade idea, and it played out, of course, to the T. No surprise there, right? Fantastic. Now, that's a nice price read, right? Now, where would you put your stop loss? Stop loss, of course, there's many methods. You can either choose the higher time frame PD array as a stop loss, so a higher time frame stop loss. You can use an intermediate term high somewhere inside here, right? As a stop loss. You can use the range itself as a stop loss, right? So 50% of the range, 25% of the range. It boils down to, at some point, when you've practiced enough, it boils down to personal preference, right? And yeah, that's the Euro idea. As you know, I'm a one shot, one kill trader. Mostly I like to catch clear, obvious setups on the 1 hour, the 4 hour. Perhaps if there is a major swing being offered, then I will take it, right, on the higher time frame. And this was a beautiful, beautiful, just classic price leg. Just bread and butter. Now, if you miss the top, you offer multiple entries by probing the order flow again, disrespecting the 4 hour bullish FVG over here, inversion, right? You got the breaker here. You got the order block, right? So in order to not be messy, right, we can go back to the good old sequence, which is entry 1, turtle soup, entry 2, order block / FVG, and entry 3 is a breaker. And you take these entries from the potential top you're looking to form down to the drawn liquidity. And this was a beautiful, perfect example offered and called live beforehand as usual. So yeah, that concludes the video. There's plenty that was said in the video, so take notes, and good luck and good trading, and see you in the next video.